traders at Axis Bank expect sentiment in the Treasury Bills market to continue the bearish run from last week owing to low liquidity levels. Akpevwe Oputu, money market trader at Axis Bank, joins me to discuss market expectations this week. Akpevwe, thank you for taking the time out to join us today. Could you bring us up to speed on market action so far today, resuming from the two-day break? What are the numbers looking like?
Okay, so we saw the FAC inflow come into the system late on Friday, so that actually spurred some activity in the market this morning. So we've seen a little bit of buying interest on the short end of the curve around the Treasury Bills space. So on the short end, the 90-day Treasury Bills trading around 3% level. So a lot of demand on the short end of the curve. A lot of people trying to place their excess fund to buy Treasury Bills this morning. And that's just, this week is actually a very short week. So we expect that there will be a CRR debit in the market on Friday. So investors are just looking for where to place their excess liquidity this time around, pending any activity during the course of the week.
Well, let's quickly talk about the naira before I take you back to the bond markets. You're expecting the naira to hit 420 this week. Talk to us about that.
Okay, on the FCY, so we've seen the INE already trading around 419 naira to the dollar. There's been a lot of demand, you know, and paucity of funds we've seen on the INE window. So we've seen rates trend, we saw a depreciation in the naira closing the week. So we expect that that's going to come into this week. A lot of demand, a lot of pressure, and we expect that the CBN will come into the market this week to intervene for the FPIs as they do as usual, and also to intervene for the SME and invisible space this week. So we also expect that the result of the retail SMIs auction that was conducted on Friday will be released this week. So we expect to see what the outcome of the auction would be.
Okay, let me take you back to the fixed income market. I know the sentiments have been bearish, but talk to us about, the last 2 weeks, the trends that you have seen. We've seen rates inching up. We're seeing investors, demanding more for government securities. But what have you seen, and what can you tell us?
Okay, so because of the liquidity in the market, there's been thin liquidity in the market. There was an NTB auction last week that took out some of the liquidity. There was also the bond auction that held the retail SMIs activity of last week. That took a lot of liquidity from the system. So we saw over 800 billion out of the system, and that's caused the bearish sentiment we've seen at the bond space as well as the Treasury bill space, because a lot of investors, trying to unwind, sell their bills to get liquidity in the market, and also the craving for higher yields. We've seen rates go up. At the last NTB auction, we saw the 1 year close around 4.8%. So this has actually shown that the rates are actually tilting upwards, even on the bond space, the longest tenor closing at 12.9% level. So we've actually seen that trading higher in the market around 12.91%. So investors actually clamoring for higher yields. So that will cause a lot of bearish sentiment and sell-off in the markets, because there's an auction that is expected to hold sometime in May 16. So they're looking to get higher yields at the auction. So that's what's actually driving the bearish sentiment we've seen in the market. So